Resource Investing News, and I'm here with Sandy Chim, who's the CEO of Century Iron Mines. Thank you very much for joining me.
Thank you, Michael.
I understand that I recently saw your Joyce Lake mineral resource estimate increase by 143%. How are developments progressing with that project?
It's progressing very well because the 143% increase falls within the measured and indicated category, and it gives us the same grade of iron, roughly about 60%, which is the kind of most sought after, very popular product on the market. Is basically hematite, that's right. So by nature is high grade, very simple flow sheet, very minimal processing. We are gonna just do crushing and screening, that's all. We're not gonna even wash, let alone concentrating it. So our initial CapEx investment would be very small. We're controlling that to within really $100 million, and our operating cost is low as well because of the very simple process. And we're moving it forward from resource. A couple of months we've got 143% increase. With a bigger base now, we're going into developing a bankable feasibility study from the preliminary economic study, which was published about a year ago, giving us already some very attractive economics.
Excellent, that sounds very exciting. So the Quebec government recently committed $20 million to studying putting rail into the Labrador Trough where you operate. What's the significance for your company?
I think it's a very good direction where the government of Quebec is taking a very keen interest in developing the sector in the province. Very encouraging to hear that some actions put together to move along that direction. Because iron ore is a business of scale. Scale means a lot of big capital investment. And one of the areas that iron ore project should invest in is actually its infrastructure. The infrastructure in the area is kind of congested. So the area can use to explore or exploit a bigger resource base in the province would be to better equip the infrastructure part, and rail is one very important part of it. And I think the government is taking a good approach to a careful study, $20 million just to see how it works. And I think that should be part of, from a sort of industrial player's point of view within the process, to really move into also look at, other than rail from there, hopefully the government will look at other port facility infrastructure, which is more immediate because a new dock is being built. So it can use immediately some dock facility or stockpiling or handling infrastructure there. Hopefully from rail, the government can move into providing ore handling facility in the province as well. But I think the province is moving along in the right direction.
Very good. So you have an offtake agreement with two of Forbes Global 500 companies that are based in China. One, Wuhan Iron and Steel, for up to 60% of your production, and a smaller one with China Min Metals for up to 10%. Those sound like very significant agreements. How are they important for you?
Of course, they are very important from an operator's point of view, that we know as we go into preparing for production for a particular project, that we have about 60 to 70% of our final product eventually is pre-sold. So very significant to us. And I think another very important aspect of our offtake agreement is that the agreement, the transaction price of the ore will be at market, which is very important, that we're not sort of giving a very big discount. I think these partners are very cooperative and very helpful in the sense that they go along with a very fair deal for everybody, and yet we are committing to our long-term supply to those companies. So they're very significant to our company.
Nice, very good. So last week there was news that India is increasing its iron ore imports due to lack of domestic production. What effect do you think that'll have on the iron markets, and will it affect your company as well?
Yeah, I think it's a very encouraging news because India has always been a net export market. Although the iron ore and by extension the steel industry has actually been growing by leaps and bounds, although China has sort of taken a spotlight away from India. But if we look at India as an economy alone, it is exactly where China was some 25 years ago. India started with 1989, roughly about 25 years ago, had only 15 million tons of crude steel production and consumption. Now, last year, 2013, India has already reached and exceeded 81 million tons. So within a span of 25 years, it grew more than like 6 times the original base of their crude steel production. So it is, I think, very reasonable to see what you just mentioned about India becoming an importer of iron, although at a point in time, just about 3 or 4 years ago, they were net 100 million ton exporter, and that was reduced over time because of government legislation, more stringent environmental requirement. That has come down to below 10 million tons. But with the growth of the economy, 100 million tons of iron ore export, which they had, would be very well consumed within the system itself when they have 81 million tons already crude steel. Right. 81 million tons of crude steel would mean there is 140 million tons of iron ore consumed. No wonder what we're seeing now, India is now from a net exporter to become kind of an importer. As the economy grows, I think it will. It's demonstrated over the last quite 2 decades, and even in the middle of the financial crisis a couple of years ago, without any stimulus program, India managed to grow in 2009 and 2010 by about over 10%. So I have a lot of hopes for the Indian market growing further, and I think their politics is getting more and more effective, putting an effective government in place, and hopefully that can provide a condition for more industrial growth in the country.
So what factors do you think are most important for investors that are considering iron ore companies and projects specifically?
I think the long-term profitability of the iron ore industry is very important. I recognize that now we're sort of at this point, roughly mid-2014, the iron ore spot price has not been performing as a result of actually a combination of more supply and the buildup of port inventory in the Chinese ports, up to 120 million tons from roughly about 80 million tons about more than half a year ago. I think that causes concern because at the end of the day, our industry has to produce profit for investor in order to attract investment. What I see today is still, it would be it's a short-term phenomenon as a result of the dynamics in a short-term spot market based on the combination of factors and more I just mentioned. So I think there is a healthy long-term outlook for iron ore spot price. When it comes to the product, we have to operate the projects very effectively because iron ore projects tend to be very large scale, and new companies coming into the play would typically bring a new team together very quickly, although very good talents are put together within a short time, but getting them to work on a project with good coordination effectively to deliver the project is another thing. So I think with the industry should look at the company's ability to be able to put a project, has historical experience working together as a group, then I think that would increase the chance of success for an iron ore project. And the deposit itself makes some difference. Although iron is iron, steel is steel, but the kind of grade of iron, the quality of the iron, would it work for the blast furnaces in our market that we're talking about are very important as well. So we should look at the characteristic of also the deposit. So in summary, the deposit, the management team, the iron ore spot price are the 3 most important factors that investors should look at before taking the plunge investing in the sector. And I do hope and I do feel that the sector has, although in today's spot price level, I think it'll come back because it's the first time we're seeing a contango, meaning that the future delivery of iron ore, for example, 2017, is higher than the spot price, what is trading today. So that tells the market that it's oversold. Right. So the long-term price is going to be higher, and we're very confident that that will recover as we have been there before over the last few years, and that the market condition can come back to a normal set of operating conditions where iron ore project will be very successful.
Oh, that's good. Very good insight for our investor audience. Thank you very much.
Thank you, Michael.
So, Mike Roger here with Resource Investing News, and I've been speaking with Sandy Chim, who is the CEO of Century Iron Mines. Thank you very much.